All right, welcome to the Men on the Internet podcast. Today we have a very special guest to the show. I like to call him my little half-black brother, but he doesn't really look like that at all. You might be surprised, but he's a good guy, a smart dude, and we're here to talk about business and money and finance and all these type of things. So everybody, here is Joey.
Hey, everyone.
Hey, Joey, tell everybody a little bit about yourself. Well, who are you? How do you know so much about business and finance? And give us a little background on who you are.
Yeah, so I grew up here in Los Angeles, and then I went on to study accounting, finance, and real estate. And that's pretty much where life took me. And
you studied real estate in college?
Yes, I did.
Interesting.
Yeah. Mm-hmm. And then I also worked in real estate. And that's, I don't know, I guess.
That's pretty much it right there.
Those would be my specialties. And then met my wife in undergrad, and now we're married, and we got 2 little ones.
That's exciting.
Yeah, they're a hassle every day.
Yeah, I can imagine. Tell us a little bit about the reason why you studied real estate, because that's a hot subject right now. But I'm guessing what made you decide I want to study real estate when so many people can say I just went on YouTube or I just studied it. What made it worth getting a degree?
Right. So my parents actually immigrated here to the States. I think early 70s, and then they started their own real estate company, and that's what got me into it. So they've been running that company for, what is it now? Over 30 years. Mm-hmm. Mm-hmm. And yeah, so that's what got me interested. And then I did some more specialization in it in college, outside of, accounting and finance and just business in general.
Do you feel like when your parents are in the business, you can learn from them, or there's actual value in going to school, studying real estate and getting a degree?
Both. So if you have, and they don't have to be your parents, but at least, folks that can mentor you or show you the ropes, because there's so much that goes into the inner workings of any industry, really, that you can't learn in college, that you have to learn either through, your own personal experience or the experiences of others. I think school kind of gives you, a fundamental understanding, I guess the technical skills, but that needs to be backed up by, personal experiences.
So it was something that was valuable. You'll still say it was valuable today, to this day?
Yeah.
Okay.
The education part.
Yeah, the education part.
Yeah.
Okay.
I mean, depending on how much you pay for it.
But So you also have an MBA.
Correct.
Yeah, and that's something that we talk a lot about, because I think we did it at the same time, or around the same time.
Yeah.
So what encouraged you to do that?
I think I wanted deeper knowledge into business, at least the technical aspect. Did my undergrad in accounting, and then did my MBA in finance, real estate, and entrepreneurship. And in the MBA classes, they give you, I guess, more specialization in your education versus undergrad. And yeah, it's just, I don't know, it's just deeper knowledge.
Okay.
But again, that's not enough. I mean, you need real world experience. Yeah.
You feel like you're putting it into practice?
Yeah.
Yep.
Yeah, more or less. I mean, it's not the same. It's not I don't know, when you're at school, it's, you're hitting the books hard. Yeah, exactly. And then, not to say you don't do that in the real world, but it's different,
Understood.
Once you're kind of in the industry, you're finding your way through. it's not so, I guess, structured like at a school.
Yeah.
Yeah.
So you went down the real estate path. So what path are you in right now, would you pretty much say?
I'd say I'm more in the finance side.
Mm-hmm.
Been investing in equities for the past 10 years, so like stock equities. And yeah, and I'm still, looking at real estate, but I haven't really touched that as much as, as the equity market in general. But that's definitely something I'm going to go back to for sure.
Something that we talked a lot about, because we met like in 2019 maybe, or 2018, but we really met in 2020. So in 2020, there was the boom of Bitcoin, which I think might have been like the third boom of Bitcoin. Because I remember 2010 or maybe 2009, there was a lot of Bitcoin conversation. And then 2016, I think, when Bitcoin hit 10,000, that was another like milestone moment. And then 2020, now all of a sudden, everybody's talking about Bitcoin. But now it seems like the conversation's a little bit dead. What do you think about Bitcoin? Is Bitcoin dead?
No, Kelby. Bitcoin's not dead. I don't know. It's showing some definite staying power. I mean, it's been around for almost 15 years, something like that.
Yeah. But I mean, it went up to 69,000.
Yes.
And now it's at like below 20.
It's like 25.
Okay, it's at 25.
Yeah.
So with it being at 25, the conversation is not the same as it was during the pandemic when everybody was throwing money in Bitcoin. All of a sudden, we saw all these Bitcoin like investors, and everybody's telling you how to do it right.
Yeah.
So right now, with the conversation kind of being dead, it seems like Bitcoin is gone. But I remember one time you told me that Bitcoin comes in cycles, which appears to be true.
Yeah.
So talk to me about that. Like, are we expecting another boom soon, or how do we predict it?
Yeah. I mean, I'm expecting another boom. But if you look at Bitcoin, it grows actually with the money supply. If you track it to, how much the Fed prints, the more money supply that gets pumped in, it pushes Bitcoin up. On top of that, Bitcoin has, the 4-year halving cycle where it cuts the supply given to miners by half, by 50%. Mm-hmm. So pretty much it's cutting that supply down every 4 years.
I have a question about the fact that it's tied to the money supply.
Yeah.
So if it's tied to the money supply and Bitcoin is supposed to be something that's like an alternative to money, if I'm getting that correct. So it's like the government-free version of money.
Right.
But it still is most valuable when the government plays a role in Bitcoin. So how detached really is Bitcoin from the government?
It's detached in the sense that the software behind Bitcoin, as far as I know, isn't controlled by the government. Although I've heard, things in the interweb where it was a CIA created asset. Okay. But as far as I can tell, it's running as its own separate software, detached from the government or any singular entity. Mm-hmm. So in that sense, it's detached. But it's also tied to the economy in the sense that the reason why the value of the asset goes up is because there's higher demand in purchasing Bitcoin from people, retail investors, or soon to be, large funds. They have to pump money into it to purchase it, which pushes the price up, right? Mm-hmm. So in that sense, it is attached to the economy, and the economy is directly affected by money supply, aka, printing or printing by the Federal Reserve.
Okay, I have a question about that. So I have two questions. The first one is, could there ever be a place where the economy is booming? There's a lot of money floating around and people are doing well, but Bitcoin is also not doing well. Could that ever happen?
Uh, that's a good question. I mean, so far since the beginning of Bitcoin's existence, we've been in monetary expansion. There hasn't, only until last year really did the Fed really push for higher interest rates. I think they did it back in 2018 and it scared the market, and then they relaxed, and then we went down to 0% in 2020. But I mean, if you look at the graph, literally the interest rates from the Fed have been going down ever since Bitcoin's existence. So Bitcoin's never really existed in a tightening or heavy tightening cycle from the Federal Reserve.
Yep.
But you're saying if there is continual expansion, could Bitcoin go down?
Yeah.
I think if there is loose monetary policy with a lot of cash, it will continue to push Bitcoin higher. For two reasons. One, Bitcoin being a hedge against, the devaluation of a currency like the US, right? Like Bitcoin can be considered a hedge to the devaluation of, a fiat currency.
Yep.
Right?
Yeah.
And two, Bitcoin also having to, I don't know, break a certain barrier when it comes to like money flowing in from other countries or other organizations that have been barred from investing due to regulation, right?
Yeah.
So those are pretty much the two aspects that can really push Bitcoin's price around in a monetary expansion process, right? So if they're expanding monetary policy, but causing high restrictions to investing in Bitcoin, that could push the price of Bitcoin down. Does that make sense, right? Like that would be a case where you could push the price of Bitcoin down even if monetary policy is expanding. But in general, I think if monetary policy is expanding at a, reasonable rate, it would push Bitcoin up.
Okay, I have way more questions now. So let's start with. Okay, I'm going to start with this one. What is the actual value of Bitcoin? And I'm asking you this not as like what is it cost to purchase a Bitcoin, but when somebody has money and they place it into something, they're expecting that money to do something, whether it's fund someone to come up with a new product or service, so that they can make some money back on that. So what is the actual like value proposition of Bitcoin?
Right. So, I mean, the way I look at it is it's cryptographic software that
helps people do what?
It allows an exchange of value through a network that is decentralized. It doesn't run through the current, network rails that we have today for money, i.e., banks. The way we move money now is through banks and wire transfers, and those all run through the old rails, the old networks that connect all the banks across the world. Bitcoin being this new network on new rails where you could send value through the Bitcoin network. There's no middleman like there is today. Like if I wanted to send you, Kelby, I wanted to send you like $5, I'd do it through Venmo, and Venmo would send it through its associate banks and it would get to you, right? But I could send Bitcoin to you directly through the Bitcoin network, through your address. So it essentially cuts this middleman out. And that, I think, is the value proposition of Bitcoin, one of the main value propositions. It's
Okay.
like
And I'm guessing of all cryptocurrency.
not all.
Oh, interesting.
Yeah. I mean, in theory, if you're like a fundamentalist in crypto, it's like, yeah, you want it to be decentralized and you want it to be able to move freely without, people in the middle.
Except to use it, it still kind of has to go through the old chains, like going through the bank, paying whatever you have to pay, whether it's tax or a fee, to get the actual money to use it.
Maybe, or if I don't know, if a merchant just has their Bitcoin address and you just send your Bitcoin to that. Yeah, he just send it straight to their Bitcoin wallet.
Is that growing, do you think?
I don't know. That's a good question. I mean, I would think.
Yeah.
I would think.
Okay, here's my other question. So you said that Bitcoin, essentially the value of it goes up with the economy.
Yeah.
Right? So right now, what's being told to we the people is that the current day economy is a great one, and that there's record low unemployment and most companies are thriving. Now, I personally see a lot of companies laying people off, but it is in specific sectors like tech and media. They're cutting a lot of jobs, but that is very, very small because we're in California. A lot of people work in those fields, but the rest of the country appears, what they're telling us, like database wise, is that the rest of the country appears to be doing pretty well. So with the stocks up, which I think is controversial, right? But with the stock market up and most people are working, but Bitcoin is down, what do you think that is a result of?
Right. So, I mean, I think it would be, the interest in money in these various assets, right? I mean, the reason why the stock market goes up or Bitcoin or any of these assets is because people are putting money into it, right?
Yep.
They're paying up whatever price for these assets. If the economy is doing poorly, people have less money to invest,
Right.
per se, right? So I don't know, like if you make $100 and you just spend all $100 on your, your day-to-day
Lifestyle.
yeah, exactly,
yeah.
right?
Mm-hmm.
Like how much are you going to put away to invest, right?
Right.
I mean, I think currently right now in our current state, if people are losing their jobs, maybe there's less money flowing in.
Mm-hmm.
But that's not to say that there's not, trillions of dollars in the market already by people or, larger funds that are investing that are just moving money around, right?
Mm-hmm.
I mean, if you look at the stock market, S&P and NASDAQ have made huge runs. I don't know. You could arguably say it's due to 7 companies, right?
Yeah.
Like, Apple.
Some people say 5.
5, yeah. I mean, you look at NVIDIA and that thing has just gone through the roof. But it's like you have to realize that money managers are sloshing money around and pushing that money into certain stocks, right?
So is the stock market storytelling? Do you feel like it's just a manipulation of?
I mean, there's
data?
a lot. Yeah, definitely.
Because they
definitely.
say numbers lie, or men lie, women lie, numbers don't. But it seems like the numbers been lying lately.
I mean, it's a tricky place to be because honestly, yeah, there is market manipulation. People are large funds with trillions of dollars to can move the market. They can move company stock, up or down. I mean, in general, as an investor, if you're just, a retail investor, you probably want to I don't know, buy like a S&P 500 index, and just dollar cost average into that, and because at the end of the day, if you look at the U.S. stock market,
Yeah.
it's up and to the right. Obviously there's
Historically.
yes,
Yeah.
historically it's up and to the right. So if you can just stay in there and stay diversified, you're gonna generate a return over your lifetime.
Here's a question for you. People say we're in late stage capitalism, and in some ways, I can kind of understand what people are saying, because the cost of everything is beyond what most people feel like they can afford. The cost of housing is really high in cities, places that people want to live. Not to say people who are in, smaller areas don't want to live there, but places where there's more population, it's really expensive to live there more than ever. The cost of food is very high. The cost of vehicles are very high. So it almost seems like there's not much more things can go up without something breaking, and then having to start all over again. We've never experienced that. And I know you said that, historically the stock market goes up and to the right, like with reasonable dips. But could we experience something where it falls and tanks for a good period of time just because we need like a financial reset?
Yeah. I think, historically that's been shown that there are,
But
recessions.
what I mean to say is, when a country heals from its recession, it goes up and to the right. And what I'm saying is, it doesn't seem like there's much more up and to the right that we can go.
For the United States.
Yeah.
I guess my question to you is, what is late stage capitalism? Is that what you just defined as?
I guess what I can describe it as, or define it as, is a point where there is massive discrepancies in wealth, or yeah, that's what I think I would say. Like there's a small group of people who can afford life, and then a really big group of people that kind of can't.
I see. Do you think we're in that now?
I don't think we're quite there, because we're not there. It's not like a third world country, but I do think, when I think back at how much credit people have, right? Like, we're at trillions of dollars in credit card debt. How much debt people have that's like non-mortgage. And I think about the fact that most people are at the brink. I think the fact is, most Americans don't have $1,000. So when you hear those, facts and tallies and things like that, you kind of just wonder, if things get 20% more expensive, it's, it cracks. Things crack.
Yeah.
30%, something like that.
Yeah. Okay, we could take the most recent recession, right? The
08?
Yeah, the Great Financial
Okay.
Crisis, or
Yeah.
I think that's what they call it, GFC.
Mm-hmm.
How did that ultimately affect the
Population?
the population with, less than $1,000 in their bank accounts, right? I'm assuming that those at the top,
They
got bailed out. They're fine. They're fine.
Either they got bailed out or they committed suicide.
Oh, I don't know the numbers on that, but yeah, it's possible. I'm sure in the Great Depression, people were
going out.
Yes.
Going out bad.
Yes.
Yeah.
Yes. The question is, how bad was it in 2008? And I don't know, what was I? I was barely in college, maybe.
Mm-hmm.
So I didn't really fully understand, what people were going through.
Yeah.
But from the sounds of it, it was really bad, right?
Yeah.
Did that end capitalism, or did that end our country as we knew it? Or how did that ultimately, when we talk about late stage capitalism,
Right.
I'm trying to understand.
And it's
like,
a
'cause I mean,
popular
like,
term. I don't personally use it, but the more I think about it, the more I'm like, how much more could we push people?
Are we talking about like the end of capitalism
Maybe
as
a
we know
restart.
it?
Maybe
Huh?
a restart.
A restart? Yeah,
Yeah.
right. I mean, we could look at '08 as a restart, right?
But can we really though? Because after '08, there's the like the comeback. I think I would call it like the great comeback.
Right.
And then everything skyrockets. Let's just say you were prepared in 2008 and you had some money and the recession hit everybody and you bought a bunch of real estate at 80% off.
Right.
Today, you're a multimillionaire.
Right.
Right?
Right.
So, yeah, like it was a recession, like things slowed down, yes. But the rate at which it came back, is that sustainable? That's what I mean to say. You see what I'm saying?
Yeah. I think it took us a long, if you're looking strictly at the stock market.
I think it took
think
like
it-
60, or like 52 weeks or something like 60 weeks to get back to where they were and then to go above.
Was it?
Yeah. Because I hear Dave Ramsey talk about it all the time,
Yeah,
where
okay.
he's kind of like, it. You know, a lot of people sold when the stocks were at their lowest. But if you had just waited X amount of weeks,
Yeah.
it would have been right back to where it was, and then it would have been even higher.
Correct.
So
Correct.
that's another thing about the stock market, where it's like, I know when Donald Trump was president, people used to say like the stock market doesn't determine the economy, right? In a certain sense, that's true. But then there's also so much manipulation that happens where it's like, yeah, the stock is up. The company could have just laid off 4,000 people,
Correct.
you know?
Yes,
and then
exactly.
now they're just like, we have a profit. We're making profit, but we're also down a ton of employees.
Yes.
You know?
Yeah. Cut your costs.
Yeah, exactly. Yeah.
In terms of the recovery, my understanding is that it was more of a gradual recovery to the economy as a whole from '08. Now, when we talk about how the economy recovers, the U.S. economy, I mean, it's hard to say that it's not resilient.
Okay.
Because
Because the people are resilient.
I mean, I think so. I think the U.S. compared to other economies in the world, I mean, I'd say the largest economy, right?
Yeah.
We also have a lot of innovation in this country, right? We have agriculture, we have oil as well, right? We have technology. So it's hard to take down the U.S. economy for a 10 count, right? I mean, It might be down for a little bit, but more or less it gets back up. So yeah, like if you were able to time the market and buy the dip, you made out well. I think in general, if you are investing in the U.S. economy via stocks or real estate or whatever other assets, right? Over the long run, it's going to do well, right? I mean, we haven't gone down the direction of like an Argentina, right?
Right.
Where that was a thriving economy, and then now inflation is whatever. It's like, I don't know, the currency went up like 60% in a day. I don't know. You know what I mean?
Yeah, hyperinflation.
Right, exactly.
All right, let's go to this other one because I don't want to stay too long on that one. So, you know, we're all young adults. How do people know when they're ready to start investing? You know, because you're an investor. That's
Right.
what you do.
Yeah.
And how do you know you're like, okay, I'm ready to get down this path? What's the secret formula to knowing when you're ready to start investing?
Ooh. I think you should know once you start making money, or
I mean, there's a lot
Like-
of 13-year-olds out there making money.
Exactly. Like if you're right,
Yep.
Like, you should know when you start making money. I think, for my kids at least, I'm going to teach them as early as possible. As soon as they understand the concept of money. It's like, you got to invest this. You got to save it. You got to, it's a tool that you must use in your life, right? As early as possible. You know, like you're signing your kids up to play sports at the age of 3, Should also sign them up with a master class in finance.
Do you think the kids at under 13 are going to get it?
Yeah, I think so. For sure. Yeah. Like the concept is, one, you make money, but it's also, right, like, how do you make that money grow? Or, like, what do you do with that money, right? Like, the first thing you learn is how to spend that money.
Yeah.
Right?
Yep.
You spend it on
McDonald's
goods.
money.
Yeah, exactly.
Right. You got some McDonald's money?
Exactly. You need that 20-piece nugget with barbecue sauce.
Yeah.
And honey. But
okay. Honey.
Yeah, honey.
What a mix.
Yeah.
Don't start making fun of me, y'all, because I mentioned McDonald's.
But yes, you spend it on goods and services that help you, right? Or that fulfill something in you, right?
Yeah.
And that's more or less the concept, right?
Yep.
And that could also be, right, spending the money to invest in stocks, right? This future value that can benefit you, right?
Yep.
And I like the link is very, it's logical, right? But I think because, consumerism is such a big part of the U.S. market, we kind of stop at that point. But if you just take it another step further, it's like, maybe instead of, you're going to buy a car that helps you, a nice car, right? But also, like, what if you bought, like, a classic car that held value and appreciated over time, right? I mean, it's the same idea, but one asset can appreciate and one depreciates.
Let me ask you this. So I watched Dave Ramsey.
Yeah.
Okay. And his formula is, number one, save $1,000. This is assuming you have debt.
Right.
Save $1,000. Step number 2, pay off your debt.
Right.
Step number 3, save 6 to 8 months in the form of an emergency fund. Nothing that you invest, like it's just sitting in an account somewhere.
Right.
6 to 8 months 3 to 6 months of expenses, but I say 6 to 8 months. You never know if you're going to get another job really fast.
Right.
And then step number 4 is once you saved up everything, then you can start investing 15% of your income into your 401k, and then diversifying it into investing in mutual funds, and then after that, saving for your kids' college and blah blah blah.
Right.
Do you think that that's the right step, or do you feel like this is also telling you that there's no investing being done if you're in debt, if you don't have your 6 months, of expenses saved up?
Yeah, definitely. I mean, you got to have all your bases covered before you start investing.
Okay.
I mean, investing is the extra money that you have that you are able to put to work for yourself, And
so you're not risking, like, you're not telling people to risk. You're risk adverse.
I am risk adverse if you are financially at risk.
Okay.
If you are financially at risk, you better be risk adverse. Which is, so this is why it's important to start learning to invest at an early age. Okay. Because if you start at, say, 13, right?
Yeah.
You're probably still living with your parents, and there's probably still taking care of all of your daily needs.
Yeah.
Right?
Yeah.
So guess what? Any money you make at 13, that money you can use to invest, because it's not like you're using that money.
Have any expenses.
Exactly.
Yeah.
You're not having to put food on the table.
Yeah.
So that's important. That's why it's so important to start early, because you can actually have that money to invest at an early age. Obviously, as you get older, you need to make sure you take care of all your bills, take care of all your debt. Obviously, like if you have credit card debt that's charging 20%,
Mm-hmm.
right?
Mm-hmm.
And then you're saying, oh, instead of paying off that debt, I'm going to invest in the S&P and get 9% a year.
Yeah.
You're still down 10%, right?
Yeah.
Like it doesn't make it like you should pay off that 20% debt unless you know an investment that's going to pay you more than 20% a year.
Let me ask you a question. So you're a young parent,
Yeah.
and most times when people get a little older and B, they have a family, they start, not wanting to take so many risks. So would you say that once you have kids, the best thing you should do is just invest in mutual funds, index funds, or do you think that there's still room for risk for young parents or just parents in general?
Yeah, there's room for risk for sure. Mm-hmm. Obviously, you have to work yourself to that point. You got to make sure you, like I said, you're able to make good on all of your obligations.
Yep.
Right.
Yep.
And then just like what you were saying, right? It's all about taking a percentage of what you're willing to risk and how much risk you're willing to take. You can always take high risk with 0.2% of whatever money you want to play around with, right? Right.
Yeah.
Or if you're a little wild, you can go 10%,
Okay. Yeah.
right? It like there's ways to do. That's what's so nice about, I think, the U.S. market is you have all these options at your disposal.
Yeah.
While in certain countries they may not have, such a robust market for investing. I think the U.S. is one of the most robust markets for growing your wealth because you have so many options.
I actually don't all the way think I understand that.
Yeah.
So is it policy? Or is it, so what is it? What makes the U.S. so special where other countries don't have the opportunity that we have?
Yeah. So, I mean, I think in the United States, we have, and I don't know if this is too philosophical, but it's kind of like I don't know if you can even say this, but it's like the country of entrepreneurship or, of coming here to take chances. Yeah. Right. Yeah. To create something new.
Yep.
And having that, as the background leads to, the creation of, a robust market where people can find avenues, to take risks, find new avenues of, making their capital work. I don't know if that's why.
So it's a mindset, sort of.
I mean, that's where it starts. I think that's where it starts. I mean, if you just look at the founding of the country, it started from people venturing through the Bering Strait and then coming down through North America, right? It's like this venture into this new land. But then you also have, the ventures from Europe, right? Mm-hmm. Where that's like venture capitalism, right? We're sending people across to find this new land, right?
To start a brand new thing.
Exactly. And then, right? Like, I mean, I don't know. I think maybe that could be a part of it.
Yeah.
But that is getting like very, philosophical and deep. And then does that carry over into what it is today, where we are a technology hub of innovation? I mean, that's a question to be answered. I mean, I think it does somewhat, right? Like you come to this country and it's like, it's like the new land and venturing from the East Coast to the West Coast and finding all this new land and the gold out here in California, right? I mean, like people with dreams. I don't know. What do you think? I mean,
I think it is hard to answer because, we have this incredible, structure that I just wonder if other countries are aware and they see that, wouldn't they just do the same thing? And I've noticed that. I mean, I've seen plenty of documentaries about third world countries that have started adopting capitalism and it changed everything for them.
Mm-hmm, mm-hmm.
But there's something that you said, and that was being in the land of entrepreneurs, like an entrepreneurial space. A piece of capitalism, and this is not my personal opinion, but I think it's something that's popular. A lot of people think that entrepreneurship really stands for exploitation. So I remember writing a paper in school when I learned kind of a new definition to exploitation, and it doesn't have to necessarily be a terrible thing. Like it's just you found a problem and you create a solution for it, and you exploited that situation for your benefit. And it doesn't have to be a negative thing.
Right.
But a lot of people do feel like it is a negative thing. So do you feel like the United States is built off of exploitation? Because it seems like it when we have strikes and we have like people who just don't feel like they're making enough, but business owners are just thriving in just crazy wealth that's never been seen in history. And when we talk about things like the stock market being held up by 5 to 7, maybe 10 companies, those are people who are, it's a very small class of people that kind of manage and maintain the money of the entire country. So what do you think about that?
Yeah, on exploitation. I mean, the word exploitation kind of has a negative connotation to it.
Yeah.
When you're talking about business, right? I mean,
Yeah.
I think we could agree on that.
But you kind of have to exploit a situation,
Well,
right?
I mean,
Like
like if you're looking at, like if a doctor is, trying to perform surgery and they exploit, an issue with the body, right?
Yeah.
Where they can, they can cure that, they exploit the problem and they cure it, right? I mean, that's a positive connotation of the word, right?
Right.
So, I mean, if we're talking about that, then yes, right? Like you want to exploit the problem and find a better solution.
Yeah.
Right? Like,
Right.
I mean,
right.
I think that,
right. That's not off.
right. That I think can be agreed upon. But when we talk about exploitation, where you start taking advantage of people in the sense where, in the spirit of, not creating something that is, beneficial, but more so like out of greed, right? I think when exploitation crosses with greed, then that can be a detriment to society, right? But
How
then
do you
it's-
know the balance point?
Exactly. Like, what do you know? How do you know what's the difference between greed and profit, right? or earning your fair share, right?
Yeah.
Right. And I think that's what we battle with, right?
Mm-hmm.
I mean, I think that us being in, I don't know, I guess you could call, this country a democratic country, right? Or a constitutional republic.
Mm-hmm.
The people have a say, right?
Mm-hmm.
The people have a say against, the powers that may be,
Mm-hmm.
right?
Mm-hmm.
To fight against exploitation and greed, right?
Right.
So, like, if you're looking at companies today, is Google being too greedy? Is Microsoft being too greedy? Is Apple being too greedy? I mean, who's using all their products? Who's paying for all their products? But at the same time, it's like they have enormous power and control, right?
Mm-hmm.
Over profits and what they can do with their capital, right?
Right.
But you as people that work for the company, right?
Right.
They also have a say as well, right? Do you want to work at an Apple? Do you want to work at a Google if they're doing things that you don't agree with, right?
I was going to mention that too, because there's a lot of people that work at Amazon.
Sure.
And Amazon gets a lot of flack about like how they treat their employees.
Right.
And either
they're being
how
sued right now.
They're being sued. Okay.
Yeah.
So they get a lot of backlash on they don't treat them properly. They don't pay them appropriately. Do you think it's just a simple situation of if you don't like it, then don't work here?
Oh man, I mean, at the end of the day, what are you going to fall on, right? Like, if you want to find the balance of power, right?
Mm-hmm.
Who are you going to rely on, right? I mean, if you're relying on the government to create balance of power, it seems to me then that you're essentially giving the government all of the power, right? Like, the balance of power is between, the people and the powers that be, right? Like ultimately at the end of the day, that's where the power balances lie, whether you're talking about like a nation or companies, right?
Okay. Are you saying something like, let's say, for example, people don't like to pay at Amazon, and they're saying they pay people too little, but the minimum wage is X amount.
Right.
So is it Amazon's fault or is it the government's fault? Is that what you're saying?
That the pay is too low?
Yeah.
Yeah, I mean,
because legally Amazon is not doing anything illegal.
correct.
But the people feel like it's unfair.
Correct. Right.
So you're saying it's the government's problem versus the company's problem.
The government has a role to play, right?
Yeah.
When it comes to regulation and, man, exploitation, right? Like how far does the government go to regulate or to, at the end of the day, right?
Okay.
Can we both agree that capitalism, at face value, creates value within an economy?
Sure.
Or for countries, right?
Sure.
Right. Can we also agree that capitalism must be regulated for it to function properly?
Yes.
To a certain extent?
Yes. The reason why I hesitate is because who's doing the law writing?
Correct.
You know what I mean?
Yes.
Like, what kind of regulation are we talking about? Yes,
Right.
there needs to be somebody overseeing this to make sure no one's getting screwed.
Right.
But also, we noticed the other day here in California, Governor Newsom raised the minimum wage for fast food employees to $20 an hour.
Correct.
I mean, that sounds like it's funky business for business owners.
Right. At the end of the day, right? Who puts
people like that in power?
Right.
Yeah.
We're a constitutional republic. We vote for representatives that then, enact policies.
Yeah.
Right.
Yeah.
And that's, that's at the end of the day, that's what we have, right? That's
Right.
what we have to work with, right?
Right.
So I don't know, when you were saying like, where does the responsibility ultimately lie?
Yeah.
It lies with the people, right? Because collectively, the people have the most power collectively, right? If the people want something done, they want this corporation either regulated, or they think that, this corporation is, doing things that they don't like, the people as a whole ultimately have the power to not buy from, they can literally, right? If everybody decided to stop using Google and started using, I don't know, Bing or
Yahoo.
Yeah, right?
Yeah.
I mean, obviously that's very difficult to do.
Yeah.
But that's where the most power actually lies, is with the people. Not to say that it's easy to get there, right? I don't think, right,
because I was going to say, like, what if the companies make it too difficult to stop the usage of their product? Like, let's say, for example, Amazon Web Services, they own most of the internet,
right?
And the tools that you use to surf and browse the internet.
Right.
So, yeah, you could say, all right, I'm not buying any more packages. I'm not using Amazon Prime anymore.
Right.
I don't like that this is making Jeff Bezos more super yacht money.
Right.
But then every time you get on the internet, he's going to get paid somehow, some way.
Exactly.
So is it too late?
So this brings us back right, to what I think is the secret weapon of the United States, and that's entrepreneurship, right? Innovation of the people, right? That someone can come up with an idea, or a group of people can come up with an idea, right? And bring that into fruition, right?
Yep.
And that is the ultimate, counterbalance, right?
Yeah.
It's not easy, but I think if you maintain that mindset, right? You maintain that value,
Yep.
right?
Yep.
That's I think like the true kind of power of, the people in the United States, right?
Yeah.
Like to find that next thing, right? To advance.
Folks, we have a lot more that we're going to talk about. We're just going to take a quick break, and then we'll be right back with you. Welcome back to the show. Today we're talking to Joey, investor, real estate guy, finance guy, just interested in business and money. So we were talking about exploitation and business owners and things of that nature. Let me ask you about strikes. So this year we've seen a lot of strikes from Hollywood. Now we saw it in the postal sector. Now we're seeing it in the car manufacturing sector. What do you think about that just in general?
Yeah. I mean, I think for me, I'd be speaking as an outsider, seeing this from the outside, not having, in-depth knowledge of unions and how those things operate, or, how the inner workings of, the Hollywood industry, right? Like, I'm definitely speaking as an outsider and just looking at what's happening. Like we were talking before, there's kind of a balance, or a push and pull on the powers between, the companies and the executives and, the people working at the companies. I don't know what my stance really is on unions. I think people should have the ability to, have a collective voice if they feel like either they're being exploited or mistreated, right? They should always have the right to voice that and stand together.
Yeah.
To, do what's best for them. Now, are you asking like my opinion on whether I agree with what they're doing, or,
It doesn't have to necessarily be about do you agree or disagree, because every situation is different.
Yeah.
Right. But there's something that comes to mind, and this kind of goes back to, do we need a financial reset in the United States?
Okay.
So my cousin one time wrote on Twitter right when the pandemic started. So he wrote about how quickly these businesses were essentially going out of business. And he was saying, wow, not only are people living paycheck to paycheck, but these companies are as well. And so that opened my eyes to a lot of things, because I started doing the research, on companies. Let's say Meta, for example. They would make, let's say, $9 billion in a quarter. And then it costs them $7 billion or $7.5 billion to keep the company running. So operational costs. So in profit per quarter, they're going to make $1 billion or $1.5 billion per quarter. In my mind, I think in the average mind of anybody, they're like, that's a lot of money, right? It's $1 billion. But then there's the other side of that. Any misstep really now could change the future of that business in a dramatic way, right? Because it costs so much money just to keep the business open. So when I think about that, I think about too, like, I often say America is too expensive for Americans. And we live in a world where, yeah, everybody wants six figures. Why? Because it's kind of difficult to live without six figures unless you're in a place where it's just not that expensive. But if you want to live in a hot spot, you want to live in New York, you want to live in LA, you want to live in Fort Lauderdale or Miami or San Francisco, you're going to need those six figures just to survive, and just live the life that I think when you shut your eyes and you're not dreaming too wildly, you can live a decent life. But then it makes me think these companies, I think that they make money. They make decent amount of money. But when unions and strikes appear, it shakes them to want to just go overseas and just hire cheaper labor. And then they don't have anybody complaining. There's nobody striking. And they're for sure going to make probably even more money. So do you think that strikes can run companies out of the United States?
Sure. Mm-hmm. I mean, I don't know. I mean, we've already offshored so much labor. Mm-hmm. I mean, if you take, the writer's strike, for example, right? And again, I'm speaking as an outsider.
Right.
It looks to me, right, that the writers, were losing. The entire business model seemed to have flipped with the new streaming, right?
Yeah.
At least from what I've seen is, there's been a major hit to residuals, mm-hmm. right? Mm-hmm. From, moving from the, the broadcast television, right? Mm-hmm. To the now streaming television. I don't know. I think I saw someone, they're like, oh, look at my residuals. It was like $27 or something.
Yeah. I have dollar checks. I have penny checks, to be honest.
Yeah. Right? Whose fault is that? Like, how do you rebalance that in a way where writers will feel that they're fairly compensated for their work, right? Mm-hmm. I mean, I don't know, but $27 doesn't sound like very much, especially if, I don't know, if you're on a hit television show on Netflix, like Orange is the New Black, you're like, it's a major hit. Some of these stars are very famous, but they're getting whatever $27 checks in the mail, right? I mean,
but there could be an argument made that Orange is the New Black is from 10 years ago.
True. I mean, yeah. But how do residuals work for a show like that, or something that gets a lot of viewership or gets people to subscribe to a streaming service, right? Mm-hmm. Like, how should those people be compensated, whether they're writers or actors, or people in the production crew? I don't know. I don't think production crew gets residuals, but
I don't think so.
Yeah.
I think it's a writer, producer, director, actor thing.
Right. Yeah. Like, how should they be fairly compensated for the popularity in the show? Right.
Well, streaming changes so much because no one truthfully knows the value of a stream, right? I think when you're able
Netflix does.
Sort of, because Netflix doesn't have any ads yet. So if they had ads, they could go to an advertiser and say, look, for every 100,000 streams, we're going to charge this. But they don't have any ads. All we know for sure is how much Netflix charges every single month.
Right. They also have metrics where if they put on a new show or a new season, right? They can see the subscriber numbers go up pretty much as soon as they put those shows out. So they have a good idea of, what monetizes and what doesn't.
Monetizes
in terms of increased subscription revenue.
Okay.
All right.
Okay, let's say Showtime, for example.
Yeah.
50 Cent had Power on Showtime.
Mm-hmm.
Every time a new season of Power comes on, the subscriptions go up. But then when the show ends, it goes back down.
Right.
So does that mean now that all the other shows on Showtime don't deserve money?
Not necessarily, but it sounds like from that, right?
Yeah.
That show that 50 Cent put together. caused a change in their subscription, right?
Yeah.
Like it was monetizable, right?
Yeah.
To what extent, I don't know. But that's, again, so this is where I think a lot of the, streaming companies or corporations or executives, right? They have the data. Like they know what's happening, whether it's at Netflix or Disney or at GM or Ford, right? Like, yeah, they put out, public financial statements. Right?
In the financial statements, they tell you how many things have been, like how many views their top shows have.
Sure. Yeah. Right.
So, Squid Games.
Yeah.
I saw the breakdown. They tell you how many views it has.
Many views, right?
But in my eyes, I'm like, okay, it has all these views, but how valuable is a view if there's nobody necessarily paying for it? Because let's say this, right? You put out Squid Games, you get 100,000 new subscribers.
Right.
But then, especially with Netflix, you watch it in a weekend, then what?
Right. I mean, they literally have all those metrics, and then they run it through their data analysis, whether that be on whatever software program that they have. They have the data. Again, this is where I think the power kind of difference between, corporations have against, I don't know, everyday people, right? It's like they have the knowledge and the data of what they can and can't do, right? In terms of, how much we can or cannot pay out, right? Like, I mean, you take the workers' strikes, for example. I mean, at the end of the day, it's like, I don't know, it's almost like, it's like a high-stake poker game where, you got to bluff to see what the other person really has.
Yeah.
Right?
Because it almost seems like the strikers know that there's money there, but they just don't know how much we can get. So they're putting out these preliminary things like the UAW strike. They're like, we want 40% more money. We want 4-day work week. Are they going to land there? Probably not. But like, let's see what happens. Is that what you're essentially saying?
Yes. Because if everybody knew the perfect information, right? If everyone had the perfect information,
yeah.
And it's like, all right, come to the table and this is what it is. But we don't.
Yeah.
Right? We don't have the perfect information. So you're going to have to come and negotiate and figure out, what someone's going to agree to or not.
Yep.
And then, I don't know. I mean, if they can bluff harder than you, then you might be folding a hand when they've got, a terrible hand.
Do you think that these companies have the money and they're just operating out of greed? Like, let's say the UAW strike, right? I saw something on the news where this guy was saying that he worked at the auto manufacturer plant for 20 years, 25 years. And he started off making $25 an hour. He's there today at the same job and he makes $32 an hour.
Right.
So can Ford come back and say, like, we just don't have the money? Like, we can afford it for a small sector of people, but if everybody gets a 40% increase, we can't do business anymore.
If everybody got a 40% increase, like the CEO did, my mind is telling me that would not work in the numbers.
That's what my mind tells me.
Right? I don't know that for a fact, but that's what it would seem if you increased your employee expense by 40%.
That sounds insane to me. Sounds like you're going out of business fast.
Right.
Or you're going to get a Ford Explorer for $95,000.
Correct.
Yeah.
Right?
Yeah.
At the same time, does the car manufacturing company have funds that they are expensing that could be better used to compensate their employees? And I think that is the question, right? I mean, yeah, like I said, they publish their SEC financial statements, right? On edgar.com. And the numbers are there, right?
Yeah.
But there's a difference between, the numbers that are listed and then the deep knowledge of, what's happening in the company and what they're looking to do in the future with that money.
That always comes into play. R&D.
Right. R&D, right,
Yeah.
Exactly. I mean, if you look at some of these expense lines, it's like R&D, selling and administrative expenses. Like, yeah, R&D, selling and administrative expenses under operating expenses.
Yeah.
And how do you actually know what is necessary and what's not, and what should go to employees and what shouldn't or can't?
Yeah.
Yeah. And obviously, if you're looking at these and there's a flagrant foul where it's like, yo, dude, you guys just like, you're spending 20% of your revenue on the CEO. I don't know if that's the case, but I'm just saying if that was the case, that would be insane, right?
Yeah.
Like that would be caught right away.
Yeah.
It's the little parts in between where, and it's still big dollar amounts, right?
Yeah.
But I think
relative, because I remember there's a CEO who spoke somewhat recently about a company that just appears to be failing. And the people were like, why don't, instead of cutting jobs, why don't you cut your bonuses for the year?
Mm-hmm.
And he was like, even if I gave myself a $10 million bonus, it's not going to save your jobs, because when you split it 2,000 ways, it's gone. Like it's a few dollars on everybody's paycheck, and then after that, you're still going to lose your job. So is that even a realistic thing for a CEO to say, who could be making $10 to $20 million a year while employees are making $70K?
Oh, for like why they should take a pay cut, even if it only adds
to pennies,
insignificant amounts to everybody else.
Mm-hmm.
I mean, it depends on how valuable that CEO is. I mean, that is why it's good to have, discourse between, folks that are running the company and folks that are not running the company, right? Because then you can,
like a board.
No, folks not running like the everyday worker or laborer, right?
Yeah.
Because if you feel like you're being exploited,
mm-hmm.
right?
Mm-hmm.
I mean, that is a valid feeling, especially if there's a ton of people that feel like they're being exploited, right?
Mm-hmm.
I mean, that could be a very valid feeling.
Or it could be that there's a mole in there who's making everybody feel.
That's true. I mean, that's
like they're
true.
being exploited, and then after that, they're like, "We need more."
Yeah,
and, boom.
Yeah, and I mean, and if the mole is able to do that, I mean, there's something valid there too, right? I mean, if people are like, "Yo, like I feel perfectly fine working for this company. They treat me well. Like I'm getting paid well. Like why would I listen to you?
Yeah.
Why would I want to put my job in danger?
Yeah.
Yep. So I think that's fair. I mean we looked at the resolution of the writers' strike,
mm-hmm.
right?
Mm-hmm.
It came out to what, like a 5% raise, right? And then it was like you had to have 50% of
the episodes per writer.
Ratio,
so
right?
for every 10 episodes, you have 5 writers.
Yeah, exactly, right? Increase the writer count, right?
Mm-hmm.
I mean, if we're looking at, the deal that was actually reached, I mean, how would you grade it?
I think based on what they were asking for, and I don't know all the details, but it doesn't seem like the writers got what they originally wanted. I don't think so. But I will say this. During COVID, you saw a lot of people quiet quit. You saw a lot of people just flat out quit their jobs. Or a lot of people who fell into investing and say, I'm never working another job ever again. And then companies had a hard time even hiring jobs. I think we're still in that spot now where there's not enough labor force for the workforce. When people tell me now the power is in the hand of the people, I kind of disagree with that because I think the power is in the hand of the business owners. Eventually, people will A, need money, or B, like need something to do.
Mm-hmm. Yeah.
Right? They'll need passion or reason or something. But for the most part, I think most people are not, I would say, skilled enough to invest to where they can live off of whatever they saved, which is probably maybe under $100,000.
Mm-hmm.
And then you can't time the market. A lot of people got into day trading, and I think the numbers on day trading are like 90+% of people don't
Lose money.
Yeah, they
Mm-hmm.
lose money.
Mm-hmm.
So I have a feeling that most of the power is in the hand of the business owners, who, if they can hold long enough, people will come crawling back. Like, okay, I need a job now because I can't afford to be alive. So
Was that the case with UPS?
UPS.
The drivers at UPS, I think, went on strike, and it sounded like they got a decent deal. That's what it felt like to me, that the drivers got, a decent deal. I think
that's what it seems like.
That they were happy with, or they made headway.
That's what it seems like.
Yeah,
I've never seen so many dripped out UPS drivers in my life. Okay, the UPS trucks have rims on them now. Okay, they're spinning. They're driving around like it's Fort Lauderdale, bouncing around like it's a rap video. I'm telling you right now, I never seen that in my life.
That's what we need. That's what we need.
Yeah, instead of sending the jobs to China.
Yeah, I mean, so I think it can fall both ways, right? I mean, the companies do have a lot of power. Like I said, they have the data, right?
Mm-hmm.
Like they have that.
Yeah.
So that's a significant piece, just like our federal government. They have all the data, right? But that's not to say that, there's the people can't challenge that, to a certain extent. Right?
Yeah. There's the power sways.
Yes.
Yeah, it sways. It's like it's on a spectrum.
Yes.
So you may not always be the one in power, especially if you're good. You know how some people say, like, this person is rich enough, they have FU money. So like, I'm going to do whatever I want to do. And if I burn this bridge with you, it doesn't matter, because I could literally invest my money in the S&P 500, live off of the returns of that, and I'll be fine forever.
Right.
But then most people are not quite at that place just yet.
Yeah.
So they're walking a fine line.
Yes.
Yeah.
Yeah.
Let's go to politics real quick. So we know that, Biden is in office. There's a high inflation right now. The cost of things are so expensive. I texted you the other day that I went to Del Taco and I got a burrito, $15 burrito.
Mm-hmm, mm-hmm.
Unbelievable.
Yeah.
Right. I went to Wendy's yesterday or 2 days ago, and I got a single sandwich, and it was $12.97.
Mm-hmm. You gotta use the app. You get $2 off the combo.
I eat Wendy's once every 3 years,
gotcha.
And I'm good for the next 3.
Yeah,
I'm not going because it tastes burnt anyways.
Yeah.
It tastes burnt anyways. I couldn't believe I paid $12, almost $13 for a sandwich they made in 1999.
Yeah,
okay, I'm telling you right now.
I think Wendy's stock was killing it, if not still killing it.
Really? Okay. Well, I'll tell you what. After this podcast is out, y'all might be having trouble selling these Frosties. Okay? But I'll tell you this. It seems like the economy is not in a pretty nice spot to where 2018 was, where it seemed like everybody could get a job. Everybody was pretty much making money. People were happy with their 401ks.
Yeah.
They just weren't quite happy with who was the leader of the country at the time. Truthfully speaking, and let's not be biased, how much does the president and federal government affect your personal finance?
I would say that in certain instances, it can greatly affect the market, the stock market. And by extension, the economy or, other assets. a lot of investment or asset growth, right, comes from sentiment, right? How people feel, right? Right? How people
Consumer
feel.
sentiment.
Consumer sentiment, right?
Yeah.
Investor sentiment, how they feel about the future, right?
Yeah.
If the politics in your country or the leaders or whomever is running it, brings about bad sentiment or negative sentiment amongst the people, yes, that can hurt the economy. That can hurt future spending, future investing by people, right? By extension, right? So, yeah, can the government and current political state, mess with the economy? Of course.
Because of how people feel, but not so much about
policy as well, policy as well. I don't know. I'm bringing up Argentina again.
Okay.
Right?
Oh, they coming after you.
I know, man. I know. Or in most countries where the economies are getting destroyed,
okay,
there's usually issues politically, I would say. I mean, I don't really have the hard data to back that, but I like there's probably a lot of political corruption, right?
Political unrest,
right?
Because the market likes stability, right? So it likes being able to predict what's going to happen, at least in the next few months, in the next quarter.
Yes.
So if there's political unrest, if there's corruption, if it makes people feel uneasy, now people may not want to spend the same way. They may want to hoard cash, right?
Correct. I mean, that's one part of it. Also, I mean, policy that restricts business growth, right? Policy that, prevents businesses from making certain investments, whether that be obviously like, if you look at just kind of how the Federal Reserve is like moving the money supply, right? That's essentially what it does. It's raising and lowering interest rates. They're supposed to act independently of the government, right? They're their own private entity. But
that's not quite happening.
You can't say that the Federal Reserve is not, thinking about, policies and things happening within the country, whether it be from the leader or other policies being passed in government, right? I mean, I don't know. Maybe in a perfect world, it would act completely independently, but I don't think it should. It should take into account these things, right? That's part of their job.
Yeah.
So definitely politics and the leader of a country can affect the economy. To what extent, right? I mean, at the very least, we live in a country where there are term limits, right? See.
So can a recession last one presidential term? Hey, we had a recession for 4 years, and after that,
well, I do remember in 2016, right, prior to the election, I remember there were talks that, this guy gets voted into office, it's going to crash our economy. We might get thrown into a war, which could crash our economy. I remember hearing that. I don't know if you remember that in 2016.
I think I heard about that, but I think for the most part, they were like, Donald Trump is just an idiot, so he won't know what he's doing. So that's kind of what I heard. But I don't know if I heard it like these policies are going to land us in a recession.
Right, right.
But what I did hear was afterwards, after the fact, when everything seemed to be fine in 2017, 18, 19, He just adopted Obama's economic plans.
Right. Exactly.
Yeah.
Exactly.
Mm-hmm.
So, I mean, I don't know. Someone can give me the hard numbers and give me the evidence of which way it unfolded.
Yeah.
Right. Like that's hard to quantify or really say like, okay, so who was, the driving, factor to whether
decent,
it be
a good 3 years.
Yeah, correct. Right.
Yeah.
All right. So but can it affect it? I mean, yes. I don't know. I mean, I don't know how you can deny that politics and leadership in a country does not affect that country's
economic
well-being.
status.
Yeah. Right. I mean,
let's talk about the state of the state that we're in, which is California. And more specifically, we're in Los Angeles. So people who are from Los Angeles, I've heard, and just in conversation, when they ask me, do I feel like California is different now? I always say yes. I moved out here in 2009, and I feel like it's a totally different place in many, many different ways. But I also was 18 when I moved out here. So maybe I'm just becoming more aware, but I don't remember things being, in my opinion, probably as poor as they are now. I feel like the state is not ran in a way that
I guess how so?
So I'll say this: like my first apartment in North Hollywood was a 2-bedroom apartment. I had 2 roommates, and it was $950, and they paid $330 something, $333, $337, and I paid $277. I feel like that's impossible today, and even if it was 11 years ago. Normally, you would expect 11 years later a 33% raise in costs. That place does not go for 33% more than what it cost in 2012.
Mm-hmm.
So I think, the cost of everything has gone up so ridiculously. And then also there's just more homeless people than ever. And I feel like crime here is like kind of handled poorly as well.
Mm-hmm.
When I was a mall cop, I remember I had started working as a mall cop, and then I was able to arrest people. And then maybe a year in, they were like, you can't touch anybody at all. And if you do, they can sue you and you could lose. And if they steal things, just let them go. It's not a big deal. So all these things that come into play, I think, just make for a worse place to live. But has it always been this way? And I just had my blinders on for the first few years, and then now, as more of an adult, I'm realizing it, and it's just new to me.
I mean, there's a reason why California is gaining 200,000 people a year. We're losing 100. I think we lost 100,000 people out of the country, or out of the state last year.
Well, during the pandemic, they lost 2 million people.
They lost 2 million people.
But as of 2023, there is a surplus of people moving into or back into California.
In 2023.
Yeah.
Right. Does that, I don't know what measure you would use to say what the to say what the landscape of California is. I think, okay, homeless population, for example, is one metric, right?
Mm-hmm.
Is that due to more people being unable to afford shelter, thus increasing homeless population here? Does it include people from other states coming to California because there's more resources here
Mm-hmm.
for the unhoused, right?
Mm-hmm.
So I think those are two different things that go into that metric, right? Obviously, if there's a lot of people in California that are unable to afford a home, even though they are working, a full-time job or afford shelter, right? Even though they're working a full-time job, that's a problem, right?
I mean, doesn't that tell you, if somebody's working a full-time job and they cannot afford shelter in the city that they live in,
correct,
doesn't that tell you that something's off? Maybe we do need a huge financial reset?
That would tell me there's a big problem. Now what's the data on that? I don't know. What is the data on that?
I don't know, because in my opinion, a lot of people that are living on the street are probably not working full time.
Okay.
And could potentially have either mental illness or they're addicted to drugs.
Yes. Yeah. I think it's something like 70% of people have mental illness, right?
Yeah.
I mean, that is a big problem, right? And like you were saying, it was growing in that's growing in California, right?
Yeah.
I mean, so how much of that population is because we have more resources for the homeless, right?
I mean, there's probably a lot. And not only that, I think the weather plays a part
100%,
into it too.
Yeah.
Just the fact that, all right, we could sleep on the street 80% of the year without being frozen.
Correct. And that has nothing to do with the economic well-being of Californians, right? I mean, are Californians, worse off or doing worse economically over the past, 10 years or 15 years?
Right. Are they?
I mean, I don't know. I don't know the answer. I mean, do you know the answer?
You're looking to buy a house.
Yes.
Okay. You're looking to buy a house. Do the prices of the homes not trigger you a little bit? Because when I look at them and I go down to that section where it tells you how much the house was in 2018.
Correct.
And you're like, okay, 2018, in my mind, 2018 was like a year and a half ago. But,
right.
Truthfully, it's, 5 years?
Yes.
Okay. A house cannot go from what it used to be maybe $650,000 in 5 years ago to now like $1.4 million.
Okay.
So that to me triggers something is off.
So LA is restrictive when it comes to real estate development or building.
But did that just come into play recently?
No, I think it's always been pretty restrictive. Like
so
if you go to Houston, you can build whatever you want, wherever you want, more or less, right?
Yeah.
But if you come to LA, there's a lot of regulation. That does put a cap on supply, right? Because we're talking about, are Californians well off? I think the first or one of the first things people think of is shelter, right?
Yeah.
Because that is more or less the most expensive part of your budget.
For sure.
Right? Like 30%, 40% for some folks.
If y'all paying 40% to be in a roach infested place, you got a problem.
Right.
40% is crazy.
Yeah. I mean, it's so are we saying that Californians are worse off because of the shelter problem here in California? I mean, that is a valid question. I think we probably do have some of the highest shelter costs as a percentage of, your income.
What if I add more to it? So you pay $2 million to live in your house, and then you step outside and there's a homeless person right there and there's needles on the ground. So it's not only the fact that you're paying a lot of money. What do you mean? Are they sharing the needles with me?
I'm sure if you asked.
I don't think they're going to do it.
All right, well, that's on you, buddy.
You know what I mean?
Yeah.
I think if you pay $2 million for a house,
okay,
you ought to have the nicest house with a lot of land. But over here, you're paying $2 million and you're probably getting a house, something that in Florida would have probably cost maybe $500,000, maybe.
Yeah.
For let's be honest, $375,000, something like that. You're paying 5 times that, and then when you step outside, it's like Gotham.
So should we open up regulation? Should we make it easier to provide shelter? Because if we opened up regulation, I think the supply and shelter would go up. That's
yes,
what I
but
think.
then the value of the properties would go down. And people who bought these houses 20 years ago are now sort of screwed because they put most of their money as an investment in their house.
That is correct. That is correct. So people in California or in LA, I mean, because I think regulation is probably the biggest factor when it comes to the supply and demand in shelter.
Mm-hmm.
You know, I think so. I think if they opened up regulation, like, people would build more.
Yeah.
So I don't know. I mean, I don't know if that's the case everywhere, but I feel like that's the case here in LA.
Yeah. Is there any saving grace for California?
Man, you're just bashing on California.
No, I'm just asking.
Oh, yeah. Yeah. I mean, I think so.
You think so? I mean, I think San Diego is awesome.
Yeah, I mean, San Diego's nice.
San Diego's nice.
San Diego's
I think
nice.
Orange County's nice.
Yeah, yeah.
I went to San Francisco this year.
Yeah.
Boy. Boy.
Dude,
it wasn't what I expected.
it's a beautiful town.
There's beautiful parts.
It's a beautiful town.
Like the outsides of it. I
Are you talking about yourself?
No, look, I don't think California is in a place that's. I know I'm like making jokes, but I feel like the people who live here, in some cases, are a little bit robbed of a dream. What I mean by that is, if you ask the average person who lives in Southern California, let's say they're not in, Bakersfield or something, but they're in a large city. So San Diego, San Francisco, Los Angeles, I don't know where else, Sacramento.
Uh-huh.
If they think that they can own a home one day, what's the average answer?
No.
Yeah, it's going to be no. So sometimes when I think about this, I'm like, sometimes I feel like I live in a state that's made for big companies only and the people that run them. But
For the wealthy.
Mm-hmm. But I say big companies for a reason, because I mean, it's kind of hard to do business here with, you know what I mean? Gotcha. So only a group of people can do business here realistically and can take on all the heat that comes along with trying to be entrepreneurial here.
Yeah.
You know what I'm saying? So unless you sacrifice a lot in the first 5 years, and then after that, like, you overcome it, and then cool, now you're in a good spot.
Why?
Maybe there's regulation that oversteps its bounds.
I mean, okay, so I think I personally agree with that.
Okay.
Right? But why do we have so much regulation here in California?
Guess that's what the people want. I mean, that's what the people keep voting for.
It seems to be, right?
Or maybe some people don't understand what they're voting for. That could be another thing. Yeah, because, I mean, let's think about it. A lot of people vote with their parties.
Mm-hmm. Mm-hmm.
And each party does their job to make the other party seem like the absolute worst thing. It's either one party is racist or the other party is Marxist.
Mm-hmm.
So it just further.
Which parties are those? I'm just
the left and the right.
Okay, gotcha. Okay.
So now it drives people to be more of whatever it is that they choose to be. So no one wants to be racist, and the racist person doesn't want to be Marxist. You know
okay.
I mean? So now when people vote, they're voting with that in mind. All right, well, this could technically be bad for me, but At least I'm not racist.
Okay.
You see what I'm saying?
Okay.
So that's why it's like they could understand. People could understand what they're voting for, but they don't want to have that on their heart that they voted for something that could potentially hurt people of color or women or other minorities.
Right. So they think that's more important?
Yeah. Like Bobby Kennedy's style.
Okay. Is that so? If people are willing to put that above economic prosperity or not, or economic incline, is that their prerogative?
Yeah.
And if that's how Californians want it, I mean, is that okay?
Yeah. I mean, ultimately, we both choose to live here.
Correct. Exactly.
We could move to Texas.
You could.
We could move to Georgia, Florida.
Yes.
Someplace that makes sense for whatever it is that we want.
Correct.
But we keep choosing to live here.
Correct.
So as much as I think like we can bash California, we choose to live here. But one thing I will say is, just like the people who are on strike, if they feel like they're being taken advantage of, they use their voice to let people know what's bothering them and then try to find something that works for everyone.
Yeah. I mean, that's pretty much the only way.
It's the only way.
That's the only way.
Marching in the street 2020 style.
Get out there, do your part.
Let's end on something nice and fun.
Okay.
And sweet. Let's see here. Okay, so you're married with a family. You got 2 kids.
Mm-hmm.
I know a lot of people, like, they're scared. I know for me, if I had a child, I'd probably be scared. I think if I was getting married, I would be scared. Like, what am I gonna do? And as a person who's not like, without a career or something like that, I still feel like I would get the like fear of finances. Like, okay, I have to take care of my family now. This is so intense. How did you even get to that point where you're like, all right, I have this family, I'm going to take care of them, and not only am I going to have 1 kid, I'm going to have 2. Like, what mindset did you get into to know that you're going to be okay?
I mean, it's pretty simple.
Really?
Yeah, it's pretty simple. You have to find an amazing partner. That is the, at least for me, that was what did it. I found someone that, we're committed to each other till death do us part. And with that, I believe you can overcome anything. That includes 2 kids. and that's what I believe. Obviously, when it comes to the nuts and bolts of, financially being able to, support your family and getting through the nitty gritty.
Mm-hmm.
That, I mean, it comes, right? It happens to you. It comes, whatever needs that you need to meet, as long as you have that other, not to say that, you can't do it on your own. But for me, having, that other person, I feel like, we could get through, whatever life throws at us, together. And I don't know. I mean, yeah, obviously it's scary. Like, oh, do I want to start a family? Do I want to have kids? What's that going to mean to, my lifestyle? Or, how's that going to affect, my finances? Hey, those are valid fears, but you got to take the leap if you want to, and I don't know. For me personally, faith in God is the number one thing. Mm-hmm. And that gave way to, the rest of my life and how it's, fallen into place. That's, I don't know, that's where I believe, things start. And then, life is full of fears and uncertainties and things that no one can predict or foresee, right? Mm-hmm. But except for God. But it's the idea of being able to get through those things and having someone by your side, right?
Yeah.
Like that, that you can, band together. That's, I don't know. How do you put a value on that, right? Yeah. Like, how do you, I don't know. Like, how does society put a value on that today? I'm asking you.
I think the value on relationships just depends on what you consume. Because there's a sector of the world that finds no value in it, And I the other day I said to my neighbor, he said something to me about food or meals or something, and I said, man, I need a wife, dude. And he goes, be careful what you ask for. And his wife was standing right there. He was like, because it ain't what it seems, And I was like, well, dang. And then I know there's another guy like you who's going to be like, hey, man, if you find the right thing, it'll work. So I think it really just depends. Like the value of everything depends on A, your desire for it or your need for it, and B, what value you place on it. There's a lot of people wandering around outside that don't think that they want love or that they want a relationship or that they want children or a family because, hey, man, I just want to be the rich auntie that, travels the world and I come back with dope gifts and I give it to my nieces and nephews and boom, that's it. But then there's other people who are like, I put a value on this and it's important to me.
Yeah. I think if you want to start a family, I think that was your original question, right?
Yeah.
About having kids or starting a family. Mm-hmm. That is, I think, the first step,
finding value in it.
Finding value
for it.
In your partner.
Yeah.
Right?
Yeah.
Right? Because when you say start a family, is it like
not baby
start
mama.
A family, like a single person family with yourself?
Right?
Well,
right?
What I mean?
Yeah,
It's I don't know if is that considered a family? A single person?
It depends on what you file on your taxes.
Single head of household. Single family head of household.
Well, let me ask you this final question real quick. I know that there's a young guy out there who is in need of just one piece of advice about finances. I'm sure probably getting married, maybe having a baby. And what is the very first thing you would tell a young guy who's probably married, potentially having a baby, to do financially?
Man, like very pragmatic.
Mm-hmm.
Dollar cost average into the S&P 500 index. I don't know. To me, that's like, I don't know, with your first like few $1,000s, I don't know, pick like VOO, like Vanguard, even though they like control everything. I don't know if that's something like you just have like a few $1,000s you want to get started on. Like that's like, I don't know. You can't really say safe bet, but like that's what I would feel comfortable generally speaking for everyone, you know. Obviously then you can get into like stock picking specific companies, or, you know, getting into REITs. And I don't know, if you want to get into real estate, obviously like it's a higher barrier to entry.
Just
right?
give them one thing.
Oh,
the one thing.
Man. Yeah. I mean, I just dollar cost average into the VOO. Man. That's, yeah.
What's the VOO?
The Vanguard, it tracks the S&P 500.
Okay.
Yeah.
All right. So you heard it here first. If you are scared about your finances or something, and this is not financial advice.
No. And there are many issues with Vanguard and BlackRock and State Street and Franklin Templeton. Yes.
But they figured it out some way. So not financial advice, but if Joey was having his first,
if you're like starting investing, right? Like if you have a pool of money and you just want to start investing that.
Yes.
Just dollar cost average, meaning like take a fixed amount every paycheck or every week or every month and just buy VOO. It has a low expense ratio.
You seem like you're in pain to say that.
It's a little painful. Yes, it is. It feels like I'm selling my soul a little bit. Okay. Oh, I'm sorry. I almost forgot. Okay. So, if you're having kids, start a 529 plan.
529B?
Yeah, I think so. Yeah. Education for your kids. I think now there's also an additional, like I think you can put 6,000 in there for your kids, and if they don't use it for education, I think there's like a tax-free way for that to go to your kids now. My buddy was just telling me about it yesterday. I have to do more research, but I don't know. Look at that. If you have kids, it sounds like that might be something like of interest for young parents, for sure.
Sick.
Yeah.
Okay.
Yeah. And try and start a business. There's a lot of benefits. It's really hard though, but just think about it.
Try to start a business.
Whatever it may be. Be entrepreneurial in your mind. And maybe you get it on paper one day.
There we have it. All right, ladies and gentlemen, thank you for watching this episode. Today we had on Joey. If you like this episode, leave a comment. Let us know what you agree with, disagree with, how much a burger at Wendy's costs for you in your town, because I really want to know. And if you could just do me a huge favor, just like the video, share it with your friend, or drop a comment, or do a mixture of all three, just so that the show keeps on growing and we can share this cool information with even more people. My name is Kerwin Johnson, and today again was Joey. Thanks for coming on the show. Give you a round of applause.
Thanks, Kelvin.
Absolutely.
You're the man.
I do my best to be.
Dude, I love this guy.
Right back at you. All right, everybody. We'll catch you next time.